So let's have a look, very brief look at this exam question. Evaluate the usefulness of trade credit and overdrafts for small business owners. Well, both of these are sources of finance, so we're on topic 5.2. They are very important sources of short-term finance for new and established businesses. That's the first point to make. Trade credit is an arrangement between a business and its suppliers so that you can buy raw materials and stock now and pay for it later, usually 30 to 60 days later. This eases your cash flow problems. Okay, really good for buying things that you need all the time from your suppliers. So you often see builders going into builders merchants, buying all of the metal and bricks and things that they need for the day or the week, and they'll pay for them 30 to 60 days later. It means that you can keep trading, keep in business, and not have to worry about paying for essential things right now. Buy now, pay later. A short-term source of finance, an arrangement between a business and its suppliers. So we're evaluating the usefulness of this. Well, on a positive, it means that a business can pay later. It can help reduce cash flow problems month to month, and it's usually interest free. So providing you pay for the goods within the time agreed, so 30, 60 days, whatever, it's usually interest free. That means there's no charges, no extra charge for borrowing this money in effect. On a negative side, the cons, you still have to pay for the goods even if you don't sell them. So if you buy 10,000 cans of beans from a wholesaler and you can pay for them 90 days later, you still have to pay for them even if you can't sell them. And if you do pay late, you may have to pay extra fees. This is called interest. So on the one hand this, on the one hand that. Okay. Now, an overdraft is an arrangement with your bank to let you spend more than you have. So the bank might say, okay, you've got about £18 in your account now, but we'll let you have up to £2,000 as an overdraft. So you could go to maybe minus 2,000 on your account. Okay, but what you normally have to do is pay it back very quickly. It is a short-term source of finance for covering day-to-day expenses. Imagine if you have to pay all of your workers' salaries on the 20th of every month, but your customers don't pay you until the 30th. Well, there could be 10 days where you have a lot of money going out and not much coming in. And an overdraft is a good solution short-term to bridge that gap between you having to pay people and people paying you, so it solves cash flow problems. Now, the really good news is that an overdraft allows a business to continue trading, so you can keep trying to sell your goods and conduct business activity. It helps you with short-term cash flow problems, as we said, and it's usually very quick to arrange. Normally, if you set up a bank account as a business, they give you an overdraft facility and you can negotiate that with them. So it doesn't mean that every month you have to ring up and ask for one. The overdraft is normally always there and you're allowed to use it each month, providing you get your balance in the bank back above zero as soon as possible. Because an overdraft is essentially having a minus figure in your bank. Okay. The bad news is that interest on overdrafts is usually calculated daily. So the longer you are overdrawn, that's the phrase, the more you pay back. So how to evaluate this? Well, there's no doubt that trade credit and overdrafts are incredibly important short-term sources of finance that help with cash flow problems. On the one hand, they allow businesses to keep trading, meeting customers' demands. On the other hand, it might mean that businesses buy lots of raw materials that they can't sell. That's trade credit, for example. It might mean that businesses have to pay interest on trade credit and overdrafts, thus increasing their costs. But these extra costs are probably not as important as a business surviving. Continuing to meet customer demands is more important than the short-term financial costs of an overdraft or trade credit. On the one hand this, on the other hand that. However, there's no doubt they're both very, very important.